Hello friend, in this video a very important topic of banking uh, which are important for state and central level exam also will covered in this video. So if we talk about the types of banking system, so Indian banking system classified into five ways. First one is central bank. Every country have the central bank. In India it is RBI. Second is commercial bank for commercial purpose, which are three types: public sector, private sector, and foreign banks. Third is specialized bank: NABARD, SIDBI, EXIM, and NHB. National Bank for Agricultural Rural Development, SIDBI. Small Industries Development Bank of India. EXIM, Export and Import Bank, NHB. National Housing Bank. KCC, Kisan Credit Card, a type of bank. Okay. Cooperative Bank, PAX, DCB, SCB, Development Banks, IFCI, SFCS, and RRB, Regional Rural Bank of India. So the public sector for the public purpose and SBI, UBI, Union Bank of India, Punjab National Bank, and Central Bank of India, Bank of Baroda, Canara Bank, etc. are the most important types of commercial banks, which is a public sector bank. Okay. Topics covered in this video: evolution of Indian banking system, history of banking in India, nationalization of bank, and formation of State Bank of India. Earlier it was known as Imperial Bank of India. Nationalization of six banks in India 1980s, and subsidiary of SBI nationalized in 1959. Conclusion: impact of nationalization, liberalization period 1991 to till date. Evolution of Indian banking system. Banking in India forms the base of the economic development of the country. Major changes in the banking system and management have been over the years with the advancement in technology, considering the needs of people. The history of banking in India dates back before India got independence 1947 and is a key topic in terms of question asked in various government exams. In this article or in this video, we shall discuss in detail the evolution of banking sector in India. So the banking sector development can be divided into three phases. First phase is the early phase, which lasted from 1770 to 1969, when former Prime Minister Shri SMT Indira Gandhi nationalized 16 banks 1969. Okay. Second phase, the nationalization phase, which lasted from 1969 to 1991. Second phase, nationalization by Indira Gandhi. Phase 3, the liberalization or the banking sector reforms phase, which began in 1991 and continues to flourish till date. History of banking in India, given below a pictorial representation. The evolution of the Indian banking system over the years. First is pre-independence, before independence, that is 1786 to 1947. Second is post-independence period 1947 to till date. Pre-nationalization, post first phase. Sorry, here three points are first phase, second phase, and third phase. Okay, by mistake it has written the same thing, but this is the phase of post independence period. Okay, pre independence period 1786 to 1947. The first Bank of India was the Bank of Hindustan, established 1770 and located in then Indian capital Calcutta. However, this bank failed to work and ceased operation in 1832. During the pre-independence period, over the 600 banks had been registered in the country. but only few managed to survive. These bank, the first bank, Bank of Hindustan, was developed by Europeans for commercial purpose. Now, following the path of Bank of Hindustan, various other banks were established in India. They are the General Bank of India, 1786 to 1791, Oudh Commercial Bank, 1881 to 1958, Bank of Bengal, 1809, Bank of Bombay, 1840, and Bank of Madras, 1843. These three last bank uh, later merged with a single bank, that is Imperial Bank of India, 1921, and it becomes State Bank of India in 1955 after nationalization. Under the British rule, there are some banks in India, which is pre-independence bank, that is Allahabad Bank, 1865, Punjab National Bank, 1894, Bank of India, 1906, Central Bank of India, 1911, Canara Bank, 1906, Bank of Baroda, 1908. During the British rule in India, the East India Company has established three banks in Bengal of Bombay, Bank of Bombay and Bank of Madras, called them the Presidential Banks. These three banks were later merged into the single bank in 1921, which is called Imperial Bank of India. The Imperial Bank of India was later nationalized in 1955. Here's wrong. It must be 1955 and was named the State Bank of India. The Imperial Bank of India was the later nationalized in 1955 and was named the State Bank of India, which is the currently the largest public sector bank. If you talk the reasons as to why many banks failed to survive during the pre-independence period, the following conclusion can be drawn. Indian account holders had become fraud prone, lack of machines and technology, human errors and time consuming, fewer facilities, lack of proper management skills. Following the pre-independence period was the post-independence period, which was observed some significant changes in the banking industry scenario and till they developed a lot. So these are the reason to fail of pre-independence period banks. These banks were nationalized under the Banking Act 1949, whereas the Reserve Bank of India was nationalized in 1949, 1st July 1949. Nationalization of 14 banks in India by former Prime Minister Srimati Indira Gandhi, 1969 to uh, in 1969. Okay, first nationalization of 14 banks, and the formation of State Bank of India (SBI) in 1955. So, if you talk about the 14 banks which are nationalized in 1969 by Indira Gandhi, so the banks are Bank of India, Bank of Baroda, Maharashtra, Central Bank of India, Canara Bank, Dena Bank, Indian Bank, Punjab National Bank, Syndicate Bank, Union Bank of India, United Bank, and UCO Bank. Nationalization of six banks in 1980 and subsidiary of SBI in 1959. Okay, so the six banks of which were nationalized in 1980, that are uh, Corporation Bank, New Bank of India, Oriental Bank of Commerce, Punjab and Sindh Bank, Vijaya Bank, and the subsidiary of SBI, that are State Bank of Hyderabad, State Bank of Bikaner and Jaipur, State Bank of Mysore, State Bank of Travancore, State Bank of Saurashtra, and State Bank of Indore. Merger of banks. All these were later merged with the Bank of India. All the subsidiary of SBI merged with the State Bank of India in 2017, except for the State Bank of Saurashtra, which merged in 2008, and State Bank of Indore, which merged in 2010. Note the Regional Rural Bank (RRB) in India were established in year 1975 for the development of rural areas in India. Impact of nationalization. There were various reasons why the government chosen to nationalize the bank. Given below is the impact of nationalizing in India. This led to an increase in funds and thereby increasing the economic condition of the country. Increase efficiency, help in boosting the rural and agricultural sector of the country. It opened up a major employment opportunity for the people. The government used profit gains by banks for the betterment of the people. The competition decreases, which resulted in increased work efficiency. This post-independence phase was the one that led to major development in banking sector of India and also in the evolution of the banking sector. Liberalization period 1991 to till date. Once the bank were established in country, regular monitoring and regulation needs to be followed to continue the profits provided by the banking sector. The last phase or the ongoing phase of the banking sector developed plays a huge significant role to provide stability and profitability to the nationalized public sector banks. The government decided to set up the committee under the leadership of Sri M.N. Narasimhan to manage the various reforms in the India banking industry. The biggest development was the introduction of the private sector banks in India. RBI gave license to 10 private sector banks to establish themselves in the country. These banks included ICICI, HDFC, Axis Bank, Bank of Punjab, Industrial Bank, IDBI, Times Banks, and Development Credit Banks. The other measures taken included setting up the branches of the various foreign banks in India. No more nationalization of banks could be done. The committee announced that IBI and private sector banks equally. Any foreign bank could start joint venture with the Indian banks. A payment bank were introduced with the development of the field of banking and technology. Small finance banks were allowed to set their branches across India. A major part of Indian banking moved online for fund transfer. Thus, the history of banking in India shows that with the time and needs of people, the major development have been brought about in the banking sector with the aim to prosper it. Thanks to all. So this is all about this video. Thank you for watching.